Ladies
Ladies
and
and gentlemen, I
gentlemen,
would just like to let you know that we are late because Tanner sent the wrong link.
no. I sent the link. You didn't
No,
appear. That's the end
I
of that.
was in the link that you sent. We
I had
can
to
go to the
resend.
actual thread and show what link you sent.
I had to resend the same link twice.
That is not my problem, sir.
This old man clicked on an old link. That's what I
No,
think happened.
that is not my problem. I clicked the link that you sent for the PayPal conversation.
You need to have some young buck come to your house to teach you the technology that you're using. Okay, this is not Cisco anymore. This is StreamYard. You got to click the link. You got to join it. Okay.
I mean, we can share the screen and show the thread. I'm not the one that sent the link. You did.
Yeah. Well, no time for that. We're busy.
Maybe you need new lenses in your glasses.
We are too busy to show links and show chats.
Oh, see, he doesn't want to show the receipts.
We have to move on. And in today's video, we are talking about PayPal, which honestly, Steve, you made me read a lot more into the call and the report in your article that you just posted on Seeking Alpha. I don't know, man. I think I might end up getting a couple shares whenever the market opens. I think I might get back in.
I was thinking the same thing.
Yeah, let's talk about what you've discovered and what you're seeing in this business and why we're potentially turning bullish on a company that has been relatively flat over the last few years.
So I don't know if it's fair to say that we're turning bullish because I've never not been bullish. I just exited my position because I generated a good return. I felt that the capital was better used somewhere else. Hashtag NVIDIA. So
Yeah.
if I really thought that PayPal was going to 125 anytime soon, I wouldn't have exited. But it helped me acquire more shares of PayPal, probably around 115-ish, that area. And it ended up being the right
here.
move.
1 sec.
See, the guy sends the wrong link. Now he's freaking switching a camera. Says, I don't know how to use technology.
Honestly, I am at fault right now. I didn't even realize half my lights aren't even on. That's why I was like, why am I looking so blue right now? But just bear with me. But I can still hear you. But go ahead.
Bear with me, he says. So I think everybody knows that Tanner at this point sent the wrong link because he's discombobulated because of something. Who knows? But you good? You ready?
Yeah, I will be. You'll see some flashing of lights.
Beforehand? Like, what's going on?
Sorry?
You had all afternoon, all evening to take care of this, and now you got lights flashing.
You're going to see another one. Yeah, there you go.
I'm just glad that you don't have seizures.
Yeah. It's just my this is how far technology's gone. It flashes whenever my lights connect to the internet. I have to connect my lights to my Wi-Fi. That's how far technology has gone, which is ridiculous. But now I can control them.
Now you can, we have RBGs all over the place.
No, it's I can only go from I don't know what it is, like yellow to blue or whatever. But yeah,
you're a good role model.
You're a great role model, Steve.
I was actually thinking about shaving and just leaving a mustache in honor of you, but I was like, I really don't feel like shaving.
Yeah.
Maybe grow the beard out. We'll see.
If you show up with a huge mustache one day, it'll be the best day.
I was thinking about leaving a mustache or a goatee, but it's like, I just don't really want to. We'll see what happens when I get the razor in my hand.
Okay, but let's start to get through some things. Before you talk about what you think management should do to change the sentiment on the company, let's just talk about the company in general, the report that we saw. Was it worth the sell-off? What was the bull case? What was the bear case? Let's jump into a little bit of the thesis. And the reason why I said turning bullish is that I sold off my share of PayPal because I didn't like, I sold off on Q4 of 2024 because I didn't like the 2025 guidance. However, this is the second quarter now where they've raised guidance, and the old low or the old high end of GAAP EPS is now their low end of EPS. So they've just fully increased the ranges in which they think that they are going to be more profitable, bring in more growth, more payments, and they have a lot of initiatives that I started to look into that honestly look absolutely huge. So, yeah. What
I
did
gotta
you
tell
think?
you, I'm impressed with a lot of the comments on this. Like the comments are really good on the PayPal article.
Yeah,
Yeah.
things that are changing your viewpoint, or that.
No, it's just that a lot of people have some really good feedback with PayPal. I think it's a name that people really care about and people are annoyed at, and not many investors are able to see the forest through the trees at this point. And I think that that's the biggest problem because the narrative on the bear side is it's a dead company. Well, dead companies don't grow. Now, this is not a high growth company. I think we can both agree on that. You're Captain Growth. This does not fit really what you look for in a company, I would say.
Overall, though, I mean, as the quarters have gone by, we're not really seeing a decrease. We see these strong Q4 numbers, but people have to realize that those are holiday spend. So that's to be expected. And the growth rates are a little bit of a different story, but still growing. It's not like what it was around COVID. So be understanding that, like, if we just remove a few quarters here, you start to see that really there is decelerating growth rates. We're still at around 5%. But how are you essentially looking at this? Like, margins are improving. We have a company that's growing in low single digits. Maybe they pick up to high single digits. Maybe they break 10%. That's sort of the range that the bull case is expecting. What valuation does a stock like this usually trade at? And are they trading at that today?
Well, if you read my article, you would know.
I know, but I'm setting you up for
You
answers
know
here.
that I'm just busting your chops, right?
Yes.
Okay. So
I'm setting
before,
him up for layups, and he's freaking.
yeah, we don't need any assists. Don't worry about that. You're not Stockton, okay? So before we will get to that aspect, but the bear case has always been this company isn't growing, that the use case is diminishing. You have Apple Pay, you got Google Pay, you got buy now, pay later companies, Visa, MasterCard, et cetera, et cetera. But every quarter you look at this and they keep producing a ton of, is that a Stanley Cup that you're using?
Shift 4, baby.
Okay, that's a company, but is it a Stanley Cup? It
It
looks
is
like one.
Stanley specifically, yeah.
I got one right here, and I gotta say, they're freaking great.
They're amazing. But
I
I got
cannot
mine
believe how
from
cold it keeps everything.
the great and powerful Jared Isaacman. So
Nice.
I value it with everything. Okay. It's one of my prized possessions. Stores my water, sometimes my electrolytes.
Sometimes your electrolytes, okay. But PayPal, every quarter, except for Q4, I mean, this is a company that continues to grow, except for Q4 into Q1, but it's established a trend that it has done for the past couple of years. And we're seeing a company, even if it's low to mid single digit growth, it's still growing its revenue. So to me, that's not a company that's dying. So the bear case, my opinion, doesn't have any merit because you will never convince me that a company is dying off when their revenue is increasing. And to me, that's the biggest thing. If they were really getting squeezed, you would see them back to 7.2 billion a quarter and then into the sixes. That's just not happening. We just had the second quarter in its history where they exceed $8 billion in revenue. So to me, that's a trend upwards. Now, some people may not like the steepness of that trend, but it is trending upwards. And then when you look at the rest of the financial metrics on it, you're getting so much for your dollar per share. It's just incredible. I mean, I'm going to share to answer your question. When you look at these other companies,
No,
is that big
zoom, zoom,
enough?
zoom. Yeah.
Okay. So PayPal is now expected to do $5.20 of EPS this year and $6.54 in 2027. So they have almost 26% EPS growth over the next 2 years. They're trading at 12.91 times 2025 earnings and then 10.26 times 2027 earnings. They're trading at a cheaper valuation than Altria Group, which is a tobacco company. So
Yeah.
right now, and look, Mo, you're getting a 6.5% dividend, but still, they have 6% growth over the next 2 years in EPS. Their earnings aren't really expanding. They're just a tremendously profitable company that's doing $8.5 billion of free cash flow and a ton of EBITDA and just returning a ton of capital. But PayPal, you're able to get them at less than 11 times earnings. And when I look at the chart, and I put these companies on here for a specific reason, because Procter and Gamble and Coca-Cola are more old world companies that don't really have a ton of growth. And they're both dividend kings, 50 years plus of paying a dividend. They have respectable yields. And Procter and Gamble trades at 19.5 times 2027 earnings, and Coca-Cola trades at 20 times, yet they have both less than 16% forward growth over the next 2 years on EPS. So PayPal has 10% more growth and trades at half the valuation. It doesn't make sense. And then when you look at Visa and MasterCard, sure, MasterCard has a lot more EPS growth, but look at Visa. Visa has less than 1% more growth over the next 2 years in EPS, and it's trading at 23.5 times earnings, more than double the valuation. So that doesn't make sense to me, because while growth and while there are other things to look at, profitability is a very powerful metric. And I don't know. It seems like when I look at traditional old world companies and I look at who PayPal's traditional competitors are, it doesn't seem like this is a fair valuation for PayPal. And what annoys me is the amount of money that they've spent on buybacks that hasn't done anything for the stock. Now, you could argue all day long that if they didn't do these buybacks, where would we be right now in the share price? But they've dropped from over 1.2 billion of shares to 977 million of shares since 2014.
Yeah.
That's a tremendous decline. And I am at the point where this is not a broken company. This is a broken stock. And Alex Chris has now had, what, 3 or 4 quarters of being CEO. They've done some tremendous things, but the market isn't taking anything seriously at this point. And I think they got to make a splash, and I think they need to become a dividend company. And I think a lot of people don't want to hear that, but then a lot of people do want to hear it when you look at the comments. And buying back shares is great, but at this rate, PayPal is going to be a private company in 11 years.
Yeah, but is that a bad thing?
I mean, at this point, they've been buying back $4 to $5 billion worth of shares the past couple of years, and it hasn't mattered. I mean, you pull up a 5-year chart.
Yep.
Look at look at what the share price has done. Like, it has not moved the needle. It's flatlined over the past couple of years. And they started buying back. They started really kicking up the share buybacks when they were just crossing over 200 a share. I mean, I'm not saying this is going back to 200 or 300, but 125 is more fair value than where they are now compared to where the rest of the market is trading, especially when you have that much EPS growth on the horizon. Now, I think that they're going to do between 6 and 7 billion of capital allocation. Put 3.5 billion toward the dividend and 2.5 billion toward buybacks. You still keep the buyback program, but you now become the biggest yield in tech, 5.3% yield. The amount of people that are going to buy PayPal because of that will be staggering. The amount of ETFs it opens it up to, you're going to have a lot more volume and turn into a dividend growth company. Or you can flip it and do 2.5 billion and get around 4% yield. It's just got to do something. And outside of the business fundamentals that they are executing on across the board, They need to do something else, and the market does not care about the buybacks. And they've done so many of them. They have such a low float. I don't even know that buybacks matter at this point, because if you want to keep allocating, in all seriousness, $6 billion a year to buybacks, just go borrow the money and take the company private at this point. Put everybody out of their misery.
Well, the lower the like, although the stock price is staying the same with every buyback, you're actually seeing artificial increases in the stock price. So the market cap is actually lower, right? So wouldn't you say that now is even a better time to do buybacks than last year over a dividend?
Whenever the stock price is lower, but the business fundamentals don't change, is an amazing time to buy back shares. It is. And I love buybacks. The problem is, and I have the figures somewhere. I should have read the article before just to have it in my head. But they've allocated, let's see, 23.9 billion toward buybacks since they hit $225. And since 2014, they've spent 34.21 billion, and they've repurchased 241 million shares. So you look at the 5-year chart, they've been allocating 4 to 5 billion a year and it hasn't done anything for the share price. So yeah, sure, it makes EPS a little bit easier to hit and beat guidance, but the market's not caring about it. I think that for shareholders, it would be much better to get a big dividend, because at least cash is coming back into their pocket and they can either buy more shares with it or take it as cash and start to repay themselves on an investment that has been a destroyer of shareholder capital for years. I mean, you have to go back to what, 2018 to get to these prices?
I mean, yeah, like it was a long time since we've seen this, but there has been a deceleration in growth. There has been new competition since 2018. It's not the same space, right? Like there is some due multiple contraction. Okay. Um, Now, I think a dividend or a dividend would be fine, even a small one. I would honestly be more in favor of just like $1 billion and then keep the 5 billion in buybacks, and then as the stock recovers, continue to go heavier into dividends rather than buybacks. But um, I think that there's still, even without switching to dividends, a massive opportunity here for PayPal. I don't know if you also see it that way.
I
Um,
do. Well, but I've been ringing this bell for a while on valuation. The market has not cared, and they continue to buy back a billion plus a quarter on buybacks.
yeah, but you know what? It even as a small trade, it has been fluctuating. Like if we look at the valuations that they've been trading at, this company was at like, what was it, 88, 90 not too long ago. Like if I go year to date, this was at $92 a share. But the fundamentals are much better than what we saw back in January 17th, right?
And the market sold it off by 15% over the past week because they didn't like the earnings. Yet it was a double beat and a guidance raise.
I actually don't know what was in this quarter that people hated so much.
I can't find it. I went through it. I cannot find it. I don't understand why they hate. I mean, you look at the 5-day, this thing tanked after earnings and then it just kept falling into the jobs report.
Yeah, it is interesting because I'm looking at Venmo growth. It actually does look like it's getting to a place where they've been wanting it at, like real acceleration. Not that it's growing as a percentage, but the percentage in which it's growing is getting faster and faster. Okay, that's really exciting to me. They're starting to bring some real omni-channel products online, which I can't see how that negatively affects PayPal. None of the things that they're adding are adding on cost. It's only adding on, additional market expansion. Have you been following this PayPal World thing?
Yeah, it's interesting. I mean, they're going to connect 5 major platforms into one, I guess, silo or whatever terminology you want to use. And it's going to be able to reach 2 or 3 billion customers, and it's everywhere you want to check out. So it could be huge for payment volume.
That's what I'm wondering is like right now there's 438 million, which by the way, it's stepping up 2 million every quarter. Like they're adding on 2 million new members every quarter. Okay.
To
Guidance
answer
by
your other question, I think that the market freaked out because their payment transactions and transactions per account declined, but they didn't look at the rest of the metrics.
I'm not worried about it. Total payment volume went up.
Exactly.
Yep.
But you would actually have to read the report. And I have a gripe with the market overall because it happens with every company time to time again, especially Amazon. These things just sell off before anybody can go through the report and actually read it. And to me, I don't understand how that's possible. There's no way, even if you don't want to read the 10Q, PayPal puts out a very robust slide deck and a big press release. There is no way anybody could have read that before hitting the sell button. It's just not possible.
Yeah, it's very interesting. So I think the numbers that they're looking at is revenue, EPS, and guidance. And guidance is still not as much as people obviously want, but it is accelerating. They did bump it, and they have bumped it the last 2 quarters, like bumped it up. They have, PayPal World coming out, Pay by Crypto. They have agentic commerce solutions with MCP servers and everything all connect. Like, they are very forward looking right now. I think that sort of helps the bull case of like, oh, a new player is going to come in and offer a crypto product or something like this that's just going to kill their entire platform. It's like, well, no, they're already going to be integrated. You might as well use the place that has all your transactions. They're getting into PayPal advertising,
Well, and I'm glad you said that because think about when PayPal World comes out and you now have 2 billion people utilizing it. Look what Amazon did with their advertising platform. They're now the 3rd largest advertising platform. You're telling me that PayPal can't build an organic business out of that?
Well, do you know who Mark Greither is?
I do not.
He created Amazon advertising.
There you go.
He created, he was the lead for Amazon. And then whenever he left Amazon, he went to Uber and created theirs. And that's a multi-billion-dollar advertising business as well. Dr. Mark Greither is now working at PayPal. And like, this dude has huge ambitions. Like,
I think that there's a lot of things the market is not taking into consideration. And the fact that it's under $70 is absolutely ludicrous. And it can go lower. Like, this is not a name that the market likes. This could absolutely go lower.
Yes. Do you see it getting below, 55? Like, it might get to 58 or something like this, but it's not going down to 0
I
here.
can see it going below 60. I don't know if I can see it going below 55, but anything's possible.
Right. So that's what I'm sort of seeing here. I think that, you're actually seeing a lot of reports, which might actually bring this stock lower, is if people are worried about the economy going into a recession.
Yes.
That is what is truly going to bring PayPal's numbers down, is everything affects commerce, especially e-commerce, and that if they see a slowdown in the macro, that could hurt them in the short term. But
the jobs report was not bullish for PayPal.
Not at all.
When you revise down like that, not bullish.
Right. But whenever you look at what they're working on, Fastlane is seeing incredible uplift, and they're barely even rolled that out. Okay. They said 75% of the users that are using Fastlane are really new or were dormant PayPal users that are now coming back in. That's incredible.
Yeah.
The biggest next inflection that we have or that we see is going to multi-processors, because many of our largest merchants really need this. Adyen, for example, is going to fully support Fastlane, which they've committed to do. So that will come out in the next couple of quarters. Look, have you seen the pricing difference between Adyen and PayPal? It is.
I don't follow Adyen.
You should. They're probably the most expensive name in all of payments, by far. Like Shopify versus any of the other e-commerce sites. Like, the valuation's insane because their growth is insane. But even Adyen said, hey, you know what? Fastlane's awesome. Like, we would love to support that. So they're doing that. Fiserv is doing it. Like, once multi processors come online, like, these are not things that would accelerate their growth rates to 5 to 6%. I think that these are like doubling efforts, not just Fastlane alone, but I mean, PayPal World could. You're taking a company that has 400 million users and you're bringing it to a TAM that has 2+ billion. And the market went up less than 1% that day whenever they announced it, because interoperability has been tried multiple times in payments and it's never really succeeded. Okay. That is a questionable thing. Is there going to be something where this just doesn't work at all? But even Alex Chris said that they're going to change the name of the PayPal button depending on where you are locally. So if you're in Argentina, the PayPal button isn't going to say PayPal. It's going to say Mercado Pago. And then you'll be like, oh, okay, well, perfect. You won't even need to know that PayPal's involved, but PayPal will get paid.
And it'll show up in the metrics for all their stuff.
So I'm actually surprised that this company doesn't have a premium, let alone being priced at Altria levels.
The fact that it's priced as a tobacco company is very crazy to me. It really is. I don't understand it.
Yeah. I'd like to compare the shareholder yield of Altria to PayPal. I'm sure Altria would be higher, but
when you say shareholder yield, what do you mean?
Buybacks, dividends, and debt pay down put together.
Oh,
man. Just here, I can do it in no time.
I can give you the numbers for Altria. I have the cash flow statement of them.
No, I don't need it. I have fiscal AI, brother.
Good for you. Good for you.
Okay, wait.
I don't even know what
PayPal takes it.
What?
PayPal took it. PayPal takes the cake. So PayPal's at an 11.21% shareholder yield, and Altria is at a, what is that number? 8.7%.
Yeah, because Altria's allocated $6.9 billion toward the buybacks and the TTM. I'm sorry, dividend and the TTM, and then repurchased $1.6 billion in shares.
Absolutely crazy. That is nuts, man. And yeah, buybacks are up to $6 billion. They say they could probably do $6 to $7 billion in free cash flow. What's the price to free cash flow on that? 11 times?
On what, PayPal? It's just under 11 times. It's like 10.6 or something like that.
What other companies in a forward-looking tech space?
Not many.
Brand new, very smart CEO. The dude's young, making massive changes really quickly. What do you put? Honestly, that should be trading at 20 times.
Yeah, I mean, I've always considered if you're trading under 20 times free cash flow, that you're a value company. That's just my metric that I start seeing a lot of value there. And that was always my argument for companies like Cisco or Salesforce. And the valuations are not there anymore. Same with IBM. But you're talking about companies that were trading in the mid to high teens on free cash flow, which is just something you really don't see, especially when all these other companies that you could think of are trading 30, 40, 50 times.
Yeah. I don't know, man. So are you picking up shares on this tomorrow morning?
Yeah, I mean, I have cash laying in the account, and I got cash I was going to move in anyway. I'm very interested in adding to my position in Salesforce before earnings. I think Salesforce over the next quarter, because you have Dreamforce coming up in September/October, and I think that they are a massively misunderstood company. But PayPal has the potential to make it back in the portfolio this week, without a question. I think I want to see if it keeps declining tomorrow or if it can stabilize and start to reverse a little bit. I'm not sold that we're going to bottom out here. But Salesforce, I don't care if it goes to 240 then rebounds or not, because I think it's hovering around the bottom right now.
What do you think, the price where you start to really bet heavily on PayPal? Because it's near some of its...
Just like we did last time. I think it goes under 60. I mean, there's no reason that it doesn't go back to 70 or 75 at some point.
Yeah, but under 60 here is a lot different than under 60 last year. Like they bought back,
but based on the momentum, we could get under 60. You asked when I would heavily invest. It would be under 60.
Yeah. Yeah. I just
You
think
can't
it's
tell me
crazy.
that
Whenever,
if it gets to 58, you wouldn't be like, is there anything in my portfolio I can sell, or should I just add cash because this is a screamer?
no, but all I'm saying is like this company back at 60, like from last year, has purchased back a lot of shares, has
Yes.
grown revenue, has grown
Yes.
EPS,
Yes.
has grown free cash flow.
Has more products in development and coming into play.
Yep. More users.
Yes.
You know, the users aren't shrinking anymore. I don't think that's turning around. They're gaining 2 million new members per quarter.
I can't see a bear case. I really, other than recession or macroeconomic stuff that they have no control over, I do not see other companies taking their lunch because their revenue is growing. If their revenue wasn't growing, be a different story.
Yeah. Yep.
Is you can artificially manufacture EPS through buybacks. You can't add revenue through buybacks.
Right. Right.
That's a big thing that people are not considering.
And there's been a lot of slowdown in revenue growth because of Braintree, but now they even said on the back half of this year that could like the inflection on Braintree could potentially stop because they had started to price to value, meaning they were charging a lot more for their services than what they were doing before. And sorry, my cat is bothering the heck out of me. You're going to see him in a sec. But what was I going to say? This cat's distracting me. Just that they have a new go to market strategy, and they're actually starting to grow on Braintree again. It's no longer a deficit to their total revenue growth. So that's exciting. Venmo's really starting to pick up. Buy now, pay later is growing very fast. I think it's like 20+% year over year, which is a much higher take rate than what they have on their other businesses. And now they're starting to add in products like tap to pay in Germany. Wait till that comes out all around the world, where people like now there's a real competitor to Apple Pay because you can do tap to pay or have a physical credit card or a digital, debit card on Venmo or PayPal. By the way, the interoperability between PayPal and Venmo, that's rolling out immediately. So even their, whatever it is, 80, 90 million Venmo users will be able to now pay on PayPal branded websites at a much higher take rate than what Venmo users have done before. Like that alone could add percentages to the total take rate of the business. You're giving new capabilities to 90 million users. Like, I don't know. That makes me really happy. I don't know how the market is not pricing in any upside and is only looking at the potential downside.
It's a mystery. It's a real mystery. It doesn't make any sense. I keep looking at the fundamentals, and unfortunately, the narrative is AI. They don't have an AI narrative. The narrative is growth. People don't think it has growth, and people are caught up in this. To me, this feels like Altria Group all over again. Everybody was blinded by the tobacco narrative, that all regulation, blah 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 blah. But eventually, it caught a bid because the fundamentals were too strong, and it shouldn't have been trading at 7 times earnings. Now it trades at 11 times earnings. But
it's crazy the basket of companies that you have to compare this with.
It is disgusting, the basket of companies you have to compare this to. It's absolutely disgusting.
Because if you were to actually look at the real competitors, like if you start looking at the Fiservs and the Global Payments and the Adyen's and all those companies, they look so cheap, it's ridiculous. Can you pull up some charts of the company? I don't know if you've looked at it from a free cash flow perspective or revenue growth perspective.
I'm building something out right now as we speak, actually.
Got you. How long?
Oh, no, we keep talking. I'll have it done in a few minutes.
Got you.
Trying to make it look pretty.
What is addicting about PayPal?
What's Adyen? How do you spell it?
ADYEY is the ticker. but ADYEN is the name.
ADYEY is the ticker.
Yeah, that's the American ticker. It's a Dutch business.
Okay. What is the what other companies do we want in here?
Fiserv FI.
Fiserv. Okay.
You could look at like Visa and MasterCard are always good to look at as well.
Yeah, I'll throw Visa and MasterCard in.
You could look at Block. They're a peer-to-peer payments company with Cash App if you want.
I got enough at this point.
Okay. FIS is a good one.
I mean, but once again, I'm not understanding the bear case, and I tried really looking at it. I'm not even sure if we're getting a recession or not. It all depends on the Fed. If the Fed doesn't cut, I think we're definitely getting a recession. But if the Fed starts cutting in September, I don't know. We may not.
Yeah. Looks like we may even get 2 to 3 cuts by the end of the year if things start turning out.
They changed on a dime how quickly we were going to get cuts. I mean, it started looking like maybe we get a 25 bip cut in December. Now it looks like you said, 75 bips, and then another 75 or 100 next year. So,
yeah, and I mean, honestly, how cheap does PayPal have to trade before people do look at serious acquisitions? I think that is very true. You're talking about like in the payment space, which could turn into an advertising space of 440 million customers, 800 million customers that are vaulted, meaning that at one point they've set up an account and filled in all their information and everything. Like,
I mean, you heard me say it the other day, Apple should buy them tomorrow. It would be a great acquisition for Apple because it's free cash flow accretive and earnings accretive the next day. You add it right into the Apple Pay and you have PayPal do everything. And it's a bolt-on acquisition.
Yeah. That's the thing. I mean, 65 billion is a large market cap for many businesses. Then you look at how much cash that they're bringing on as well. Growing, still profitable. I don't know.
That's something that I never understood with the market. If you go, and I always use the example, if you were to go buy like a liquor store or a pizzeria or a laundromat, a freestanding small business, you're not looking at, or at least I wouldn't be looking at the amount of revenue per se. I care about the profitability. How long is it going to take for me to get my investment out? Even if the revenue growth is there, and that does play a component. But if you're going to pay, if a company is doing 5 million in revenue and 500,000 in profitability, aren't you? And you know that you're really not going to be able to grow the business past 6 or 7 million because it's a small business. Laundromats don't have e-commerce. Pizzeria, you can only deliver to a certain area. Like, aren't you more concerned with how long it's going to take you to get your initial investment out? Like, you can't be paying a multiple on revenue. That just never made sense to me.
Yeah. I'm not sure. Even this, what would a potential buyout be? 100 billion? I think even that would be
80.
pretty excessive. 80, 85.
Yeah. At this point, there's no premium on this. It's pretty wild, actually.
Mark Egger's pointing out some other potential, comps, but honestly, those are so tiny that you really don't get the same sort of scope of the market appreciating a more mature payments company as they do Shift4 or dLocal. So,
but look at Visa. Visa's a more mature payment company. Look how they're freaking getting.
No,
value.
I think that's a good comp. I think that's great. And I think that Visa is a stronger company, but also at the valuation, it is worth looking. I mean, this upcoming week, I'll probably be a PayPal shareholder, but I'm not going to be a Visa shareholder. I think that they have, potential real larger bear cases and trading at 3 times the valuation practically. So whenever I look at, who's at more risk, I mean, that is like, I'm not saying that that PayPal deserves a similar premium to Visa, but maybe a 50%, 80% increase in their valuation still doesn't even bring them anywhere near Visa.
Right.
And I would like an 80% appreciation on the stocks that I purchase, especially now whenever the market's hot and multiples have expanded so much. If you can find names that have not expanded, that's a great margin of safety during pullbacks. Because what's PayPal to do during a pullback? Bring us down to 45? I'll double down, like.
And the likelihood of them going to 45 is so slim if we don't have a recession. I mean, maybe I'm being naive. I'm not seeing it at all. And I think Alex Christ needs to do a better job of communication at this point. I'm sorry, but I do.
Yeah, I think that he's getting in his stride now. He's doing a lot of shareholder interviews or like not shareholder interviews, but interviews with new firesides, retail investors, larger.
I get that. He needs to go on Bloomberg. He needs to go on CNBC more.
And this is the thing as well. What they said about PayPal World is they said the second that we announced it, we got multiple, like some of the world leading digital wallets and payment infrastructure businesses to reach out to us like the exact same day that they talked about PayPal World. So although they're touching 2 billion right now, that's the potential start for what they could have said. Like Nubank is not involved in that. There's a bunch of larger players that might say, hey, you know what? We would love to expand our e-commerce presence worldwide.
So my question to you is, what acquisitions could PayPal make? You know the space
None.
better than me.
None.
None, really.
Well, you know what? Some people have brought up things like Shift4 and stuff, and like, yes, they would be good. But honestly, from what I heard about Alex Christ, one of the things that he was really interesting about coming onto the PayPal platform is that he wanted to do divestitures from a lot of the lacking businesses, not acquisitions. Now, from what was the Intuit, the company that he was at before, he actually led the biggest acquisition that they did, which was MailChimp for $8 billion. So he does have a background of taking pretty big bets on some large names, but I don't know if he will this time because it was kind of his pitch that he was not going to. They divested from a few business like Happy Returns, stuff like this. But yeah, you can't acquire Stripe. They could merge with Stripe, but Stripe wouldn't even want to be a part of that.
Are there any companies that you want me to add before I share my screen? I put a bunch on there.
FIS.
Didn't I? I put FI. You want FIS?
Yeah, two different ones. FIS.
What is FIS?
The Fidelity Payments Services, whatever the name of the business is. Everyone just calls it FIS. Okay. Fidelity National Information Services. They're a payments company.
Yeah, I'm going to look into them. I'm actually impressed by their valuation.
I mean, yeah, they don't grow much. These are some of like the more legacy payments companies that people compare PayPal to. But then you look at the margins, you look at the growth rates, you look like PayPal's a better business, in my opinion. So but FIS and Fiserv are more of the legacy global payment networks. Those are the more legacy players.
So I put a wide range of companies on this, so you can really dig into it. That big enough?
Yes. Can you also do this valuation, or can you talk about this really quick? I need to take a pee.
What is wrong with you?
I just chug water. So
I swear to God, how are you making it as a YouTuber? A Mick is just, I bet you a Mick can go 6 hours nonstop.
I can't go 30 minutes, dude.
What is going on here?
Oh, perfect. Well, we have Roy to fill in for me. I'll just be.
We're gonna wait for you. Go do what you gotta do. Roy and I will talk real quick, and then we'll go through this.
Perfect. Okay, so do you need the screen up or no?
No,
Or are you
can
guys going
take
to
it
talk
down.
for a bit?
You can take it down.
Okay, I'll be back in 20 seconds. Hey, Roy. You got audio?
Yeah, can you guys hear me?
Okay, good.
Yeah.
I figure I'll join just. You guys are probably wrapping fairly soon, but maybe you can join for 15 minutes.
Can't take Tanner anywhere.
Yeah, I heard maybe half of what you guys were saying. So it sounds like you are out of PayPal, but thinking about getting back in. The title kind of speaks for itself. Too cheap to ignore.
Yeah,
what you guys said, like that's the weirdest thing to me. Like every single quarter that I've looked at PayPal, I've been like, well, yeah, like that. Maybe the market's wanting this, maybe it's wanting that. Makes sense. It's not a perfect quarter. There's more turnaround. They want to make sure that it's there. This quarter, like relative to expectations, were amazing. Now I had some people say, oh, well, it's not growing 35% year over year, so nobody wants it. It's like, well, that's stupid. It's stupid.
Yes.
Some people are like, well, free cash flow. Well, if free cash flow is the issue, the stock would have traded way higher in the past when they had really lumpy free cash flow. That's what they do have. They reiterated 6 to 7 billion in free cash flow through the end of the year. So that's massive.
Well, and that's the funny thing. I'm not even doing my valuation. I'm going to change it I'll make another line with that, but
it's ridiculous free cash flow.
Ridiculous.
Yeah. So I'm like looking at this, and I was thinking this quarter might not be like the turnaround complete. That you still have the Braintree revenue headwinds. You still have a little bit in quarter three, but it's like, yeah, maybe it won't like the top line revenue growth if it comes in softer than I expect. And they shifted a lot of their marketing spend.
So Roy, what are we going to say? They said 6 to 7. You want to say 6.5 billion free cash flow this year in the midpoint?
Yeah, I think it's I think that's fair.
God.
Yeah, I know.
This is going to scare you guys.
But that's the most frustrating thing is like not knowing. Like, so, well, two things. A, my PayPal position, even with it being absolutely obliterated, like I've lost so much money on PayPal, it makes me sick over this year. But B, I don't want to add more. If PayPal goes to zero, which it won't, but hypothetically, if I lose everything that I have in PayPal, that's painful. Very
Roy,
painful.
let me ask you something.
I'm not willing to add more. So like seeing this sell off, which I see as irrational, would almost always be a buy the dip. I'm like, I can't.
Roy, let me ask you something. When you make that type of statement, obviously you have a higher share price than it is now. And, obviously it's significantly higher. Well, why wouldn't you feel like this is a good time to dollar cost average a bit?
Because PayPal is 17% or 16% of my portfolio.
I mean, look, I think it's a good time to average down. That's just me. And I get you don't want to be too overweight something, but this is a crazy valuation that is going to be hard to get a lot worse. Now, it can keep going down this week, maybe even the next week. And that's why I said that I'm not necessarily buying tomorrow, but it's on my high radar. And I just want to see where I don't care if it goes up 2 or 3 points. Like, that's actually what I want to see before I buy it, because I just want to see that the downtrend's broken.
Yeah. I mean, like, you guys were, I heard you talking about that too. Like the macro is a concern. They talked about that. They said that they're literally guiding for a 2% e-commerce slowdown globally. Previously, it was a 3%, which was the opposite of what's happening. Like that's how conservative their guidance is. But they're not being silly, I think, here. I mean, there's a chance with tariffs and everything that there's some real headwinds. But like, if that was the main concern, why are there days when PayPal is selling off like significantly and everything else in payments is doing just fine? It's like, I don't know why it's so hated. I don't know why it's so disrespected. I have no confidence in it. Like you guys were like, oh, it's probably not going to go below 55. Dude, this could go to 40. This could go to 35. This could go to $30. Now,
I don't know about that.
If it keeps tanking like this, I am going to be forced to buy just because I'm greedy, and I'll be like, it's already stupid valuation. It's stupid at 55, and it's ridiculous if it gets in the 40s.
Bro, it's not going to 40. Come on,
It absolutely can.
Not without an acquisition.
Oh, look, it can, but is it going to? Is a different story.
Yeah, imagine if
it-
it gets down to 40, that like the buyers that will be like JP Morgan will buy this. Like,
Somebody will just acquire them on principle at that point.
yeah, they're just on the amount of cash that like
Because
they
if they go to 40, that means that they're at roughly what, like 48, 46 billion market cap or something like that. And now you're doing 6 to 7 billion of free cash flow. Somebody's picking that up at 7 times free cash flow.
if they're at 40, they're at like a $38 billion market cap.
So all I'm saying is, I'm not saying it's likely. I would put it like less than 1% chance that it doesn't. Like less than 1% that it goes below 55. Well, maybe like 2 or 3%. It would have to take a massive pullback in the market, plus a lot of macroeconomic uncertainty. It can get there though. Somebody is asking. I was pounding the table at $60 PayPal. Now you're saying it'll go to 40. You are experiencing bad recency bias. No. It's just like the reality is what Steve said is true. Like the downtrend is like the recent downtrend after earnings has not been broken. It's a falling knife right now. Falling knives can keep
15%
falling.
a week is not something you buy into. You wait, or at least me, something I don't buy into.
Yeah.
I'd rather give a couple of percent back and make sure I'm correct, the downtrend's broken, than buy it and have to buy more because I was wrong.
Yeah, it's. So I'm just saying, like right now, it's already irrational. It's selling off because it's irrational. Irrational fear, and a lot of people are capitulating. That's what's happening right now.
Okay, I'm not worried about sentiment. Let's talk about the quarter. So what's the bear case for people right now whenever they look at PayPal?
That stable coin becomes the new payment system for everything, and somehow PayPal's crypto play gets nowhere, which makes no sense. But I mean, that does compress margin slightly, but
it sold off on the quarter though. I don't mean the general sentiment. What happened this quarter that people hated?
I have no idea. I mentioned that to Steve. Like the only thing that you can really look at is like if you think that PayPal management are a bunch of liars when it comes to the reason why their free cash flow is lumpy, then maybe. But like that's not the leadership that we have. That's not what they've done. Time in and time out, they've always executed on what they've said. So I don't get it.
Okay.
Tanner, can you pull up the
margin?
chart?
Maybe like
I'll
margin is uneven. That's going to happen. But I don't know. Like it feels like anyone that's like looking at this, and you guys have done it. And I hope I didn't color you when you took a look at the 10Q and you looked at the actual slide sheet as well. But I was like, okay, there's clearly something that the market hates. And I asked people, I was like, what's happening here? And people threw out the most ridiculous junk. And man, I can't find it. Every other quarter I can't be like, well, they probably didn't like this. And here's some areas where legitimately they weren't great. And like this, unless you had crazy expectations on PayPal this quarter, which no analyst did, no legitimate investor did.
No analyst did.
No. Like the
only thing I could find
beat on the top line too. Like I thought that was the one thing. So it's not the Braintree slowdown. It's not, because they grew at 1% last quarter. They guided for 2, maybe 3%, and they came in at 5%. They have a slide that broke down like the reacceleration. The main headwinds are over. A little bit in quarter 3, they're back to. And Tanner alluded to this, like with the Venmo and other products as well. He didn't quite say it this way, but next year there's a time where they're getting back to double-digit top-line revenue growth. Now they're not going to grow at 35%, but they 10, 12, 15.
Yeah.
And healthy margin growth that flows into that bottom line, transaction margin, dollar, free cash flow. So I don't know. I don't know.
You know, it looked like a real, or because you usually see this. If there's a clear problem that people have, a analyst will ask it on the call because they get questions from their clients and they want to know what happened. And the one that stood out to me from the questions from analysts that people were concerned about is certain banks are starting to charge for access to consumer data. And this was what Alex Chris said. He said, we looked at this end to end throughout the business, and the changes are immaterial to us. We're not going to see an impact by this really at all. Really at all.
Yeah, that's more firm than I expected.
Yeah, like that's written off. Like guys, drop this as a bear case. This is not even a problem.
Yeah.
And then I see ads. I honestly, the other value-added services, the revenue spike was actually potentially a bear case. Although it spiked, it was based on credit, so that could turn poorly, and it has turned poorly for PayPal before. Pay with crypto, I think, alleviates a lot of the concerns that people have, right? Fastlane starting to ramp. Like, these are not like small ads, like, oh, maybe that adds 1%. Like, these are like, hey, you could potentially, like we're going from 400 million users to 800 potentially a million users with Fastlane. PayPal World is going from 400 million users to 2 billion plus, and they said that they have a backlog of other digital wallets that want to add on to this. They said it's just or it's just expansion of TAM at the existing economics that we already have. How is that not priced into the stock at all? Like, the stock didn't move on that news at all. It could be huge.
Yeah, PayPal World, the Venmo acceleration next, that's starting in Q1 next year. Honestly, the Big 10 and Big 12 partnerships are not small either. That's this quarter, not the full quarter, but a lot of it. The NCAA deal, that's 700,000 to 800,000 students, and what they're doing with the Venmo, like it all. I can't think. There's a term for it where it's more than some of the parts, but it's accretive. It's a flywheel. Venmo has its like own flywheel going on right now, by the way. But with everything they're pushing out in Venmo, like, you can see that acceleration. You already hit on this, I know. Like, Venmo can be like 20% plus easily next year in Q1.
Yeah.
Easily. Like that's not like, you can see it higher than that too. Like, you can see it actually. I don't know about 30%. That's pretty aggressive, but
honestly, they are doing what Cash App hasn't been able to do. We're seeing, in that 2022, 23, maybe I should push those dates over, more like 23, 24, a real collapse in the growth of these digital wallets, Cash App and Venmo. And now, like, we saw 8% to 10 to 12. These are not like, holding up growth rates. This is accelerated growth rates on Venmo, with more efforts coming out. Like, that's without PayPal World. That's without, a lot of these new debit programs and everything that they've put out in Q3. Like, I don't know, man. I don't know.
And it would be one thing if, like, PayPal was absolutely banking on agentic commerce, which isn't certain, that, or PayPal World, like, this has to succeed or we're dead. That's not the case. Like, there's like literally nothing. Like, when these were announced, like, go up, like, by the end of the day, it'd be up like maybe 0.5% or 1%. None of this is baked into the stock. Like, no upside thing that the market has written off. It basically pretends that PayPal ceases to exist as a business, that all of these products that they're shipping, that they're going to ship zero of them. They will have zero impact. That they're easy layups of the omni-channel spend in Germany or Venmo monetization that's happening. Like, you can see it in real time. Fastlane, that all these will not work out. That pay by crypto will not work out. That all these massive.
Wait, are you saying as a bear case that their easy layups means that it's bad?
No. I'm saying this is how badly mispriced PayPal is
because they're all easy layups, and they have like
PayPal World. I don't know. Like, Fastlane, actually none of them are hard. So there are some easier than others that are just like free money, and then there's some that are like, well, you have to give it time and work on it. But I mean, like, advertising is one of those. You already said it, Dr. Mark Rather. By the way, he was not the one that created and led the Amazon advertising. He was actually bought out. His company he was brought over to Amazon for that purpose. He was the guy that sold the first customer to Amazon advertising. He was the lead, though, for the Uber payments, which went to that 1 billion plus now annual run rate very quickly.
My bad. I got that mistake, but he was a part of Amazon.
And they have similar goals. Like, it's the same guy. He's been successful actually 3 times now in his career. He's seen, like, I've seen the way that people, when they interview him, they talk to him. They know he is not just a market leader. Like, if you're going to pick like 3 people that are like the best and brightest out there as far as marketing, he might make that list for most people. Like, that's how good he is. Jeff Green probably would be on there too. So, but yeah.
Appreciate you.
I mean, he's great.
Yeah. The CEO of the Trade Desk, by the way, ladies and gentlemen. But okay, because I'm looking at getting back in. You're the PayPal bull. Why are you saying that this is a bad idea for me? Just because market sentiment doesn't like them right now?
No,
And,
I'm not
and that,
saying it's a bad idea for you. You have you're not needing the money in 5 years. Presumably in 5 years, you have time on your side. You're not doing any margin or any sort of leverage. It's a great idea. Like the only uncertain thing is when the market actually starts paying attention to PayPal again. And I don't know. I'm guessing. So if you had told me, I was thinking this quarter, probably not yet, though expectations were so low. I'm like, maybe it'll probably take 1 to 2 quarters. But if you told me the results beforehand, I'd be like, oh man, this is probably it. And that's not
the
the
market's
case.
gonna run.
Yeah. Like if you told me, okay, it's going to move like 15%, I'd be like, well, based on those results, it probably shouldn't go 15% up, but I guess I went 50% up. We're in a bull market. No.
JJ says, perceived sunk costs is a significant risk in the case of PayPal. The question in mind is, would you rather have $1 of PayPal, Google, or SoFi, etc. today, ignoring taxes? This is the real question. So I think that it's a matter of, for me, so sunk costs for me, I don't have any. I bought into this company as a trade before for 18 months, made money, got out, happy. And actually, I wasn't happy at the time because I thought I could have done better. However, I'm entering back. If I enter in tomorrow, I'll be entering back in about $10 lower than what I exited at on a stock price, not on a market cap basis, not on a multiples basis, which is much, much lower. And I think that they're closer to a lot of those catalysts that I was hoping for. Fastlane, but that's the thing. A lot of the catalysts are even new. PayPal World, Pay with Crypto, Agentic Commerce, none of those were there whenever I was in. You don't see those on value plays, by the way. There's not a handful of new catalysts in Altria Group. Okay?
Yeah.
You find those
People
in growth
are still
stocks.
saying
Oral
People are
tobacco
still
is
saying-
a big growth trajectory, just saying.
However, $1 in each of those businesses depends on my timeline. I'm not looking to get into PayPal for a 5-year timeline, to be honest. I don't want to. I do think that there will be disruption in payments, but can I get out from 67 to 100 over the next 9 months? Because
I wouldn't touch it.
But I think that they're like, I
How
don't
much
see
did you just
how.
say?
What?
He said
How
9
much-
months.
Alpha, did you just say?
67 today to 100.
Maybe. I don't know.
I'm looking at the multiple today, and maybe I don't buy it tomorrow. Maybe I wait for the end of the week, and maybe we see a sell down all the way to 60. But if I see a 5 handle in the front, how do I avoid that trade? I won't be able to. Like,
Just take it off your watch list. Don't think about it. That's how.
yeah, with a price to free cash flow of 9x or something. Like, what am I talking about here? So, I don't know.
Yeah, the problem is 9 months is like anything can happen. We don't know.
I don't have a timeline.
Okay,
I'm
yeah.
talking about if we have the same macro. I mean, worst comes to worst, I can sit on my money. I'm not using leverage. My hope
Okay,
is
well-
in a perfect trade, that's what happens.
Well, then I'll change my answer. It's like, yeah, there's no reason not to for you. If you were looking at like, I want out in 9 months and I expect it to go to $100.
Yeah, I'm going to write an option on that.
I think it well could do that, but and it should do that. Like it shouldn't be trading at where it's at, but the market can be irrational a really long, painful time, and frankly, that's the reaction to this quarter. It makes absolutely no sense. Next quarter is going to be even better. It can sell those off too. It can be like, wow, this is great. Look, you're accelerating, triple beat. Let's do negative 20%. Now you're at 55 a share.
But people act like
Quarter
this company
4 comes
doesn't
in.
move. And we went from $50 to $90 in the factor of, a year, something like this. Like, there has been massive swings here. And we just saw a big sell-off on what I thought was not a bad quarter. And I'm just wondering, and I don't trade often. I usually don't do this, but PayPal is a company that I don't know nearly as much as Roy. If you guys are looking for someone to teach you the ins and outs of PayPal, go directly to the brother of Alex Chris. Actually, I think it was his twin. And Roy has all the answers for PayPal, but I also have an unbelievable ability to get a hold of Roy. I mean, Roy answers me in 10 minutes. So I have an advantage on the market, okay? That's my alpha. So I do feel a little bit confident that I know this play or this position, and I'm not just like finding a new business. Like, we did cover this company for years. Like, I know what they're built out of a little bit here.
Mm-hmm.
That's why I feel a little bit confident to trade it. But also why no one else should follow me, because if you guys don't have Roy in your DMs like I do, you're at a disadvantage. But let's pull up this chart from Steven and see what he's showing here.
So I put PayPal twice while you were out. Roy and I were deciding what free cash flow we should use for this year, excluding the gray one and just PayPal in the blue. Based on the TTM, they're trading at just over 12 times free cash flow. What?
Zoom in if you can. And then we can scroll down to the other names.
Is that better?
One more would be great. Yeah.
All right. So the blue is right now, but they're saying between 6 and 7 billion. If they do 6.5 billion of free cash flow and the stock doesn't move, it's trading at less than 10 times free cash flow. And you start looking at other companies. The only company out of all the companies I use that's cheaper is Verizon at that point. So right now, it's trading in the same area as Mo, which is Altria Group, AT&T. FinServ and Fidelity Payments actually look interesting based off of this. But then you start looking at other companies like Procter & Gamble trades at 25 times free cash flow. And as we know from my other chart, they have significantly less EPS growth over the next 2 years than PayPal. Like, there is nothing in their profitability that makes me think the bear case is correct. And you start looking at where Visa's trading. Visa has less than 1% additional EPS growth over the next 2 years than PayPal, yet it's got almost a 3x multiple on its free cash flow. It just, nothing about this makes sense whatsoever.
12 times, bro.
12 times. And then you got my favorite two companies that I actually own both of them, and it's just crazy how out of whack. I mean, Tesla hasn't even done $6 billion in free cash flow, and all the analysts took their estimates down over the next 2 years, and they're trading at 170 times, and Palantir is trading at 276 times. If Palantir does not massacre earnings tomorrow, I do not even want to think about what's going to happen in the after hours. But I mean, look at Philip Morris and Pepsi. Pepsi's a great company to think about here. Because, okay, Pepsi's doing $6.5 billion of free cash flow, and it's trading at just about 30 times. If PayPal does $6.5 billion, which they're pretty much guiding for, they're trading at just about 10 times. So you're telling me Pepsi should be 3x the valuation on free cash flow? That does not make any sense.
But Pepsi's a innovative, rapidly growing company, though.
Oh, yes, they are, Roy.
Very innovative.
They are. They're taking, artificial flavors out of Doritos. Like, tremendous innovation.
I didn't realize Philip Morris was a growth company like Adyen.
Oh, they own Zyn.
Yeah, but Adyen is
Philip Morris has done incredible this year.
I mean, there's some headwinds in payments, and some people have mentioned that they see disruption out there with what's happening with stablecoin.
There's headwinds in tobacco.
I know. Well, so Visa is going to be fine. MasterCard's going to be fine, and they're actually priced not terribly. But Fiserv, they're in crypto too, PayPal too, and these are not. Well, I don't know about Fiserv. I've not looked into it in detail beyond their announcement, but I don't know. There is going to be real disruption. There's going to be real change. It's not going to be nearly as quick as most bulls expect that are bullish on stablecoin, and it's not going to be nearly as slow or non-existent as some people think too. But it doesn't displace everything in payments, like, or even close. Especially when you have a company like PayPal, which is like, okay, we'll do that too. We'll do that better. Actually, I think it's actually a better offer than what Coinbase has. So we'll see.
Tanner, look at how crazy Salesforce and Cisco is. I have them highlighted. Like, to me, that's super bullish. They're both producing over 13 billion in cash from operations, and they're both producing over 12 billion in free cash flow. Like, I'm telling you, Salesforce is my dark horse right now.
You know that
They really
Salesforce and PayPal partnered deeper. You know that they partnered more deeply on model context protocol stuff with the AI agents,
right?
Agent Force. Yeah, this is a mid-July, I think, headline, maybe late June. But yeah, go read that. I figured you'd love that.
I will read it.
But that's been a big thing as well, right? Is like PayPal is sort of advancing all these products. They're sort of redoing their back end. Like they've been kind of slow and clunky before. One thing that, I want to ask you this, Roy, is that one thing that Steve brought up was, is there a potential acquisition in their future? I know that hasn't really been Alex Chris's motto yet, but he has done that in the past with other companies that he's been involved in. So do you think that there's a company that they might look to acquire? And if so, what would be some areas that they would be interested in?
I'd have to think about that. It wouldn't be in the next like 12 to 18 months, I don't think, because they're so focused on rolling out all these new products that they don't. If they did that, I fear like it would be the Dan Schulman-esque. So in essence, what they're trying to do is clean their own house, and then they can have guests over, or they can have people move in with them. And that's a much smarter way to do it than under Dan Schulman. It's like, let's buy something that is attractive and completely neglect it. Like, that's not a way to run a business. So Alex Chris did not do that in Intuit. No one's asked him about mergers and acquisition, I think for good reason, but
don't get it in his head.
If you or I get a chance to interview him, that's a good question to ask. I don't know if they'll comment on it, but just saying that they're open to it in the distant future probably is the most that we'll get out of it. But I would guess if there is one of these vectors that they have that like is not just working, but like ridiculously working. Well, I guess there's a couple of things. One is Venmo is, just a United States product, but if there's an opportunity for something like that so that they can launch Venmo just quickly, easily over in Europe, just
into like Canada or something, maybe.
Never Canada, but I mean like a small acquisition like that. But I like, as far as like big meaningful acquisition, I think if one of their products that they're really focused on as far as their innovative features, it ends up like, this is great, but if we acquire somebody, it's going to accelerate it even more. So for instance, I don't think that they'll do this, but let's say Fastlane is, in several quarters, like really taking off once they have that multiprocessor under their belt, and it's doing great. But they also see like Bolt is doing really, really well too. All right, well, here is a chunk of money. We just bought Bolt too. Now we own all of guest checkout, essentially. I could see them doing something like that. AI agents, or specifically with the model context protocol stuff. If that, and this one's a little bit further out, but let's say 2 years out, that is really kicking up steam. But they also see that there's a competitor out there that's like, okay, they have some really good agents too. They're getting some market share, and it's not. There will be some larger competitors that they can't buy out, and they won't buy out. That'll be the Stripes and the Shopifys and stuff. But if they see somebody else out there, like, oh man, we can get a lot of market share from this. Because so guest checkout is not a, like there'll be like 8 players in it or something. It's a winner take most. And Alex Chris is absolutely right about that. And it may not be PayPal. The AI agents, as far as that back-end commerce stuff, I don't think that that's a winner take most. I think there's always going to be some sort of orchestration there. But I don't think that it needs to be as diversified as the current payment space. So that would be an area where I could see possibly them going into too. Beyond that, I'm not really sure. I've not really thought about mergers and acquisitions from PayPal for a while. And I'm just glad that they've held off.
People laugh whenever they say MCP and PayPal because it sounds like a legacy brand, but that's literally what they're doing. That's what they're focusing on. And think about how important that is and how the market views PayPal versus what they're actually working on. They're very forward looking. This is new management. People don't realize.
Go back to April when nobody knew. I mean, if you're a programmer, yes, but otherwise nobody knew what model context protocol was. PayPal was like, guess what? Boom, Model Context Protocol, remote server rolled out, partnership with Anthropic, and a whole developer day series where you can watch. It's like maybe 20 hours of videos all around programming. They have people there from Google. They have people there from all these other massive companies that are developers that are like, oh man, Model Context Protocol, remote server, PayPal, this is awesome. And I literally had engineering friends that messaged me, well, friend, and I messaged a couple others and I asked what they thought about this too. But the one that messaged me, he was like, am I reading that right? PayPal launched their remote server, and he's an engineer again. And I'm like, yeah. And he's like, I thought this company wasn't innovating anymore. I was like, this changes things. He was shocked. He was very impressed too. The other engineers that I reached out to, I asked, and they're like, yeah, they're on top of things. So
Also, I even like the changes between PayPal and Venmo. I think that that's one of the most or like largest changes that people just are overlooking right now. I myself, I don't have Venmo, so I have PayPal because I'm in Canada. But many of the people, even just taking payments from other creators and stuff like this, like, you know, as friends, a lot of them use Venmo. Not a lot of them use PayPal. With this interoperability, it just sort of adds to the ecosystem. You know, if you're able to use Venmo and pay for things online using a PayPal checkout button, that is at the PayPal take rate. So that's actually going to increase the average revenue per user of a Venmo user. And what do they have to do to add that on? Last thing I'll say before I bring this comment up, because I wanted to bring this up earlier. Under Dan Schulman, or under Alex Chris especially, we've been seeing a lot of partnerships rather than acquisitions. It's what made me love Shopify, was that they partner until they could create something themselves, and then they just, you know, don't need that partnership anymore, and they have it in-house. They increase their take rate. I've noticed that so much under Alex Chris that they're partnering with everyone right now. Even PayPal World, it's just one big added ecosystem. It's unbelievable. But please show this off.
So this isn't a big deal thing. This is just somebody that tagged me, and I'm glad that he did. They're not just focused on these massive partnerships. Like Alex Chris is absolutely focused on the consumer experience as well. So they're just little things. Like this is one of those where, yeah, they should have done this way before. But again, new C-suite. And so they're like fixing a lot of stuff that has not worked correctly, that they were siloed, everything was broken up. And they're near the end of that turnaround. So he said, I selected groceries for 5% cash back this month. Previously, cashback took 1 to 2 days, which is actually lousy and unacceptable. Yep. But today it was instant. My auto reload set balance less than $100, also processed immediately, unlike the 2 to 3 day in prior months, which again is unacceptable. So like not good before, and they fixed it. They're not doing like big announcements. I'm like, hey, look what no, they're just like, how can we make the consumer experience better? What is not working right now? And there's hundreds and hundreds of things like this, which are just little incremental ads. I've noticed it on my end too. I'm a PayPal user. I use it today. And I'm like, man, there's no latency now. It's moving a lot better. They're going cloud native too, which is going to help as far as a global scale. But yeah. So
Steve, anything to add?
Well, usually when you have a consumer facing product and you continue to make it better and better, and you've improved and fixed a lot of the things that honestly prior management, I don't know what they were doing. I don't think they were fixing nothing, but it's a much better product. Like people are using it more. They're happy to. The only thing that was a drawdown on the total, not the total payment volume, but the transactions per user was just that temporary Braintree headwind, which, can I show you 2 more slides?
Yeah. Yeah, I'd love it.
So this is.
I'm also happy
Most
they talked
people,
about buy now, pay later.
Doesn't understand this for some reason, which is dumb. But the Braintree headwind is like, hey, the prior strategy under Dan Schulman was essentially give this product away, hope that people buy our other value-added services. There's a strategy. It's actually not a dumb strategy. It just didn't work. And maybe I'm not going to go into the reasons for it, but I got some ideas. So they said, okay, let's have these conversations with folks. Let's instead raise the actual take rate that we have, the margins, in exchange for lower volume. That's gone actually better than expected. But I mean, the reality is that's a massive headwind against the thing that was growing the fastest. That's why top line revenue, if you look at last quarter, it was a scary 1%. That's lousy. That's unacceptable over a long term. But they had a huge headwind from Braintree, a 5% headwind this quarter over the top line revenue growth. Otherwise, they would have grown close to 10%, if not 10%. Third quarter, they do in the comments, but not in the slide deck, talk about revenue. But I mean, it's reaccelerating. Fourth quarter, that headwind is completely gone. The other thing is on the back end, this is who they brought over for their CTO. I did like Kim. I thought he was a very good CEO from Expedia originally, but for whatever reason, they decided to part ways. Srini he came over from Walmart. He is the reason, if you look at Walmart's share price, when they brought him in Walmart, he was involved in that team that on the back end was doing all sorts of these products, helping reinvigorate the engineering and getting the talent that they need there for that, helping to fix the issues with their tech stack, doing a whole lot on the automation side, helping to make massive improvements in consumer experience on the Walmart site and on the Walmart app as well. What did that do? Let me pull this up. It's only 5 years. Right here in about, it was late 2023. I remember I had a conversation with Amit, and he said, well, what else are you looking at? And I was like, dude, Walmart is freaking undervalued. Well, it's actually 2023. They've been killing it on the back end. I actually have a son that worked there at the time, just in college, but whatever. And I'm like, the market, they've disrespected Walmart. Now, this back end stuff that they did, it took years. Walmart's a massive business. PayPal, if you look at their investor slide deck, like they're nearly complete. Like they need the first half to basically wrap up all the PayPal One stuff. There's still things that they're rolling out and building, but largely they've done what Walmart has done under the same guy. Well, I clicked away from it. They have the same guy for the ads lead. They brought in like really, really good talent. In my mind, it's not an if, but a when will the market actually appreciate PayPal? I don't know. I don't have a good answer for that because of this quarter. But what they're actually doing as a company is really impressive, given when I started investing in PayPal, it was a swing. It just was. When Alex Chris came over, I'm like, okay, I want this long term. It's been a huge opportunity cost. It's been very painful. But ended up that I've seen what they've been building. I've been very impressed. I haven't liked the stock results, but everything else, for the most part, has been good. Now, there are some things that I'm like, well, they could have done better here. They should have gone more aggressive here. With any company, you have that. But yeah, that's the way I see it.
It's very interesting. Very, very interesting. Anything to add, Steven, before we wrap? You're muted.
No, other than Elon should just buy PayPal.
He won't.
That would be funny.
That'd be hilarious. He would do. The only reason he would do is to troll everybody. But
there was a big mix on from analysts in terms of evaluating this stock. We have some people putting it as high as $105 price targets after earnings, $100, $85, $84, $75 even. They have it at a hold, even though it's much lower than that. $85 from big analysts, $95 from a 5-star analyst. So like the market or analysts are even placing this with a 25% upside. It's not like there's a big attack on PayPal overall. And I think that in the quarters to come, year to come, we actually will see an acceleration on growth back into double digits, which I don't know if the market is really expecting at all. But ladies and gentlemen, please check out Steven Fiorillo, Seeking Alpha. PayPal, one of the largest contrarian ideas, needs to become a dividend machine. Great title. However, I don't know if I'm ready for that. I think they should buy back while the stock is low, especially if the stock goes down to 40, like what Roy said. And check out the great and powerful Roy on YouTube or on X at @cross_roads. Any last words, Roy?
I would caution people on just getting into this for a swing, unless you're talking about a multiple year swing, just because stocks can remain irrational to the upside and downside for a long time. Long term, the market is a weighing machine. Short term, it's a voting machine, and it's voting against PayPal. And we don't know when that'll change. I know when the turnaround, when the numbers change, but that didn't excite the market at all this quarter. So just be careful. If it's long term, great. But yeah.
if you guys will stick around just for a sec while I wrap here. But ladies and gentlemen, thank you all so much for watching. We got another unbelievably busy week ahead. Until then, we'll see you later. Bye for now.
Later, everyone.